Hey everyone, today I'm going to be showing you how you can follow market momentum utilizing a very mechanical 4-hour liquidity pool interaction system. So over to the charts, we have GBP USD on the 4-hour here. So at Evolution Markets, we use two time frames. We use the 4-hour for directional bias, and we use the 15-minute for entry. I'm going to show you both with this. And we can see here, first of all, that the market has been producing higher highs and higher lows, right? And we know that at some point, that trend is going to want to form a pullback or some form of relief. Now, how do we know how long that's going to last? Well, we don't, is the short answer to that. But there's a few ways that we can utilize 4-hour liquidity pools for turnaround areas, showing follow through for continuations, or no follow through for a lack of momentum, and what basically is a reversal. So the first thing we do, you probably know this if you've watched a few of my videos already, is marking out our current 4-hour dealing range. So in a bullish scenario, we just basically pick the highest point and trail back to the most recent definitive low, which for us, we use Fractal's indicator. It's the one by Rachel T. I know you lot ask for it quite often. And just default settings. So we pick the low and the high, and we're in this 4-hour dealing range, which you can see price is just relieving, it's pulling back. And of course, we don't know when that is going to continue to the upside, which is the likely scenario in this, right? Of course, it could just drop out through the floor. But again, that proves a point that we don't actually know what's going to happen next. All we do know is this is our dealing range, and we will continue to trade with our bias inside of this range until either the low or the high is interacted with. Now, I'm not interested in what's going on in the middle here. I'm interested in what happens next and showing you how we use momentum. So remember I just said about we're waiting for either the low or the high of this range to be interacted with, which it has. And this is what I mean by a 4-hour liquidity pool. There is liquidity, obviously, everywhere in the market, highs and lows. And these fractal points in the 4-hour in particular are real magnets drawing price towards these liquidity areas. And we can see we've had a run on liquidity here. And the signs for us as a turnaround and a shift back to the upside in this case is how the candle formation closes directly after that run on liquidity. So again, if you've watched a few of my videos before, you probably already have an idea, or you might have nailed it down. With this, we've had a candle closure as a wick through that fractal point, that previous dealing range low. So for us, that is showing a lack of momentum and a lack of follow through to the downside, meaning that right now, as it stands, unless we get more 4-hour candle closures which prove us wrong, we are now looking for a sign of a reversal, and we're looking for buys only. So what we do is we move our low down to the lowest point. We also move our range high down to the most recent high, which is now here. And we'll just use a line on that previous low and identify what our directional bias is. We've had no follow through to the downside, meaning we are anticipating price to go in further to the upside. We don't know how long. We're not going to target 1 to 50, 1 to 100 and partial along the way, take break evens and things like that. We're just going to keep it super simple, take 1 to 3s. So let's push down to the 15-minute and see what we get here. Now we use 2 kill zones at Evolution. We use, for extended kill zones, we use 7:30 till 10 a.m. UK time. And for New York, for extended kill zones, we use 1 till 3:30. And anything outside of those 2 kill zones, we will not trade, okay? So we can see here, we've finished New York. So let's just play this forward through Asia session, and we'll wait for London to open the very next day. Now, if we get another interaction with the 4-hour low, then that means that we are waiting for additional confirmation on what our bias is, right? Now, we've got to be careful, of course, with bar replay because it shows the full 4-hour candle closure before it's actually closed. So if I come back to just before 6 a.m. and just have a look here. So we had another close here, a wick. So that's still no follow through. And this current candle has not closed as of yet. So we're still looking for buys in that scenario until 10 a.m. we've seen the future. We know what happens next. But let's have a look here. Now, 15-minute range, we want to plot where this was. And the 15-minute range will tell us for entry points what to use as liquidity. Now, we can either use a sweep of the range, which I've marked with this box, or the most recent fractal, which we have here. We've had a sweep of that, but that's happened before London even begins, right? Now remember, we're only looking for buys in this scenario. And let's have a look what we get here. So we do have a most recent. So we would be setting alerts on this ray line. And we'd be waiting for it to tag. Right, it doesn't tag, we move our 15-minute range higher. And we get a new 15-minute external range. We remove this, it's no longer a liquidity point for entry for us. And we'll just play this forward. Again, we're not looking for sells. We're only looking for buys. We're outside of kill zone now, so we'll be waiting for New York. And let's just follow this 15-minute range box as well. Okay, so again, we've got a sweep of the highs. This was our new fractal low at the time. Let's leave this here for now. Again, we're not looking for sells because we're in discount. This line here is our midpoint, our EQ, right? We want trades ideally in a well-priced zone. So we want to be buying around this area and we want to be selling around here. This kind of zone in the middle is like dead zone to us. So we don't want to be taking trades too near the EQ, and we're definitely not selling in discount or buying in premium with this kind of bias. Now, we've had a sweep of liquidity here. It's taken out a ton of sell side liquidity, but look how big that candle is. I don't know about you, but I wouldn't be taking a trade directly off of that because it would just be a huge stop loss. And also it would take up the entire 4-hour range, and to get a 3-to-1 it'd be way beyond that high anyway. So that won't fit our plan. And then the next candle actually takes that 4-hour low. And if you remember also, we did have a closure at 10 a.m. so just at the end of our London. So we were actually not looking for buys at that point anyway until the next close. So there was absolutely no opportunity there. Now, what do we get next? We get a new interaction with a new fractal here. We move this 4-hour range low down. We've not had a new fractal high print yet, so the 4-hour range is still up here. Now we need to mark out this interaction. So what have we had? So we've had a wick interaction again and close. So same as before, doesn't matter how far away it was. This was the range low at the time. We've had no follow through. Well, this is heading into the next day, so let's have a look what happens on the 15-minute next. We're waiting for that wick to produce, which is there. Like I say, on bar replay, the 4-hour skips forward to a full candle. So yeah, no opportunities here. This is the point where we have that confirmed no follow through, which is again sign of a reversal. We're looking for buys only. Now, at this point, I've actually skipped a little bit too far forwards. We get our 15-minute range, which was here. Just before London takes the high, we drag up to the low. What do we get here? We get a run of liquidity here, but if you look at the kill zone, the sweep of liquidity happens like 30 minutes before that kill zone even starts. So we won't consider that. Let's jump back to the 4-hour as well. Yes, we can also see we've had a new 4-hour fractal range high appear. So this is now our 4-hour range. Smaller, tighter ranges tend to not last very long, and they tend to not produce that many setups. If we do get a setup, as you can see on the chart there, prices around the EQ, that dead zone, that mid-level of the range, where the strike rate tends to be lower, you might take more losses trading around there. So it might be a period that you want to kind of sit on your hands a bit more, just be more aware of higher probability setups. Now, first of all, this buy setup is outside of kill zone anyway, but just for the sake of argument, I'll show that it wouldn't have even fit into that range anyway. Just looking at that, there's a 2-to-1 at best. So no valid trade there. We will wait for New York. And like I say, it's a very tight range on the 4-hour. So it wouldn't really surprise me if we didn't get any opportunity this day. But you never know with bar replay, right? Play this forwards. Okay, and New York kill zone kicks off and takes that 4-hour high basically immediately. So we'll move our 15-minute range, remove that, come back to the 4-hour. We've had an interaction. So at this point, we want to wait. Now we've had a candle body closure. When this happens, whether it's one bearish candle to the downside or one bullish candle to the upside, we class this as unconfirmed. We need some further confirmation. If we get a bearish candle next, that's basically a wick on a higher time frame. So it's essentially no follow through. It's a sign of a reversal again. Or if we get a second body closure, that's a sign of momentum kicking in. Now we've already had signs of a reversal 2 times around here. We had a rejection here. We didn't get any opportunities. It drove lower, but again, we had a wick rejection, no follow through. So it wouldn't surprise me if this now took off to the upside following that directional bias, following that momentum. But we would, in the community, would be sitting on our hands and waiting for another 4 hours, would be either trading other pairs or doing other things. That's the beauty of this. You can work your 9 to 5, you can look after your kids, you can go to the gym, you've got time, you just set alerts and look at key points in the market rather than staring at the charts all day, every day. So we move this range high up because we've broken this range high. We've got a new fractal low and we've had a confirmation now of a second candle, 2 consecutive body closures without any prior wick close is strong follow through. So the difference between follow through and strong follow through is just showing that extra momentum kicking into the market. And this is the only scenario where if a bullish SFT scenario stands, we will be happy to buy in premium because we can see that we've got that true momentum. There was no initial wick and there's no bearish candle like retracement candle in between. It's just 2 consecutive bullish body closes in a row. And we class that as true momentum. So we'll see what happens. It doesn't guarantee we'll get opportunity. And of course, like any strategy, it doesn't guarantee a 100% win rate as well. So we'll move our 15-minute range up here. And that confirmation happened during New York. So like I said earlier, we will be sitting on our hands, not doing anything. And then we've got Asia. So let's play that forwards into London the next day. Almost there. Are we still within this range? Yep, still within this external 15-minute range. Sweep of the low before kill zones. So we just move this range to here. Current price and trail it back to the most recent fractal high. Now, what do we get here? If I just come back, so I press the wrong button. London kill zone has kicked in. We've had strong follow through to the upside so we can look for buys. We get a sweep of the fractal range, external range low, and a candle that is not too large. Can we, with a 3 pip buffer on top of this, so if that's rounded up to 12, 13, 14, 15 pips on this is kind of standard minimum for GU. Can we get a minimum 2 to 1 to the high, which is our trade rules for strong follow through, or it must get a 3 to 1 for no follow through and follow through. We can get a 3 to 1 on this anyway, or even you can get a 2 to 1 if you want. If I'm not mistaken, it just drops lower. We saw that. Now we'd remove this order, which was not tagged in. And is the trade still valid? Yes, it is, because with our extended sweep entry, as long as in a bullish scenario, it creates a lower low, then we can basically put up an order on here instead. Same rules apply, round up to 13, we want 14, 15, no 16 even, because it's 3 for GU minimum. And again, we can get a 2 to 1 or even a 3 to 1 if we wish. I think this tags in, does it? Probably the next one. What happens here? Doesn't tag in, we delete that order. The next one, when it closes, produces a lower low. So it's an extended sweep, still inside kill zone. This time we can probably get a tighter stop, round up to 10 and give it 3 pips buffer, so 13. 3 to 1, we can get that. Or you can target 2 to 1, it's up to you. That tags us in, and if I'm not mistaken, it comes lower. Does it tag us out? We're tagged in during kill zone, so it's absolutely valid. Sometimes price just takes longer to play out and it'll hover around our entry point. There's nothing inside New York, and it actually plays out. I actually thought this was going to be a losing trade, but it shows that trade what your plan tells you and not what you see, right? So with this, we had an initial range sweep, didn't tag. We had an extended sweep. Remove the original order, we place a new one. Again, same thing, drops lower, doesn't tag us in, we delete that pending order. The third one is still producing lower lows and still inside London session. We're still buying anywhere. Doesn't matter about the EQ in this situation because we're strong follow through, following that momentum. If this was standard follow through, then we would be waiting for price down here. And this is exactly why we implemented a strong follow through bias, because it allows us to capitalize on opportunity like this. So we get a 3-to-1. That was pretty decent. So we'll play this forward now. And we can counter trend as well. We can look for sells in premium of a bullish strong follow through scenario. As long as there is enough room again for a 2-to-1 with SFT, or 3-to-1 for follow through and no follow through before the range lows in this situation. But this candle's quite large, although we can probably get a 2-to-1, even with a 30 pip stop loss, which is very large really. We're looking for around 20 pips or lower, ideally on all pairs. But we can see here, if we did a 3-to-1, which it looks like it will get, it's taken up the entire 4-hour range, which is something as a theory that should put you off. We found through testing, look at the difference between them. And it's not just that it looks bigger, it's the fact that time and time again and data suggests that these do not play out very often. Because this could quite easily float around, right? You'd be in profit, great, it does this, comes back, takes liquidity, and then carries on to the upside. Remember, this is a counter trend play, so we're against the trend, we're against momentum. So it makes more sense to have a smaller position than a larger one, especially in a counter trend situation. So that's something to just be mindful of. We'll see what happens over Asia. Are we going to remain in this range, or is it going to take the high? Now we've got London here. Let's just mark our 15-minute range, which now is here. We've got an internal liquidity point, this most recent internal fractal low. Again, we're strong follow through, so we can take buys in premium. We'd set an alert on this, and it's London, so we'll be off making coffee. Whatever it is that you do in the morning. Doesn't take that low. We're outside of kill zone, so remove that alert. We're not trading now. And just extend this 15-minute range. We'll wait for New York. Okay, a new 15-minute range. It's extended higher. Trail the low. You wouldn't need to do this near enough as often in a live scenario, right? Because each one of these candles are 15 minutes. So you're probably moving your 15-minute range box no more than 2 or 3 times in an entire day. So there's really not a lot of analysis to be done, and it takes the 4-hour high, so there's no opportunities during New York. Now, again, we get one body closure, so it's unconfirmed. So we're having to wait another 4 hours. Again, you're off doing other things, chilled out. And then we wait for the next candleless confirmation of directional bias. What do we get here? We get a body close followed by a bearish body close. So that, like I mentioned earlier, is another form of no follow through. It's a reversal point. It's a sign of a lack of momentum in the market. We move our range high up, move our range low up because we've had a new fractal print, and we'll identify where our range was and where the interaction point is. We've had confirmation. It's no follow through. So now we are looking for sells as long as we are in this premium and well-priced premium area, and we need to be at least a 3-to-1 before we get to the range low. Let's drop down to the 15-minute and see what we get. We got New York, and we've seen what the 4 hours done, so we're just going to wait for this. It's about this point that we get that no follow through confirmed. Remember, the 4-hour prints ahead of time when you skip on bar replay. Let's just leave that there until we get to close to London, and I'll move that 15-minute range. Right, around now I'm going to move this range because we're getting close to London. So we've broke all these lows. We had a fractal high here, which we've now taken again. So this is our current external 15-minute range. Now you've got to remember what your bias is. You can even draw it on your charts. You could literally get a text tool and you could say 4 hour is NFT bearish. sells in premium. And if you've tested enough and you're confident enough, you can also buy counter trend play in discount. But you need to make sure you got your data and just take your time with it. Don't rush into things. So let's play this forward. Must be getting close to London now. Our range has now moved. That sweep was before kill zone, so we're not considering that. Okay, now this takes the high. Remember, we've got bearish scenario. We're looking for sells in premium. We're in premium. We've had a 15-minute range sweep. But again, look at the size of the candle. It's very large. 20 pip stop's not unusual, but are you going to get a 3-to-1? No, you're not. So that invalidates the trade. We do get an extension on that. So a higher high is an extended sweep. It's a slightly smaller candle. So round up to 14 and give it 3 for GU. So we've got 17. And it's close, but you can't get a 3-to-1. And even then, I'd argue, like earlier, it's taken up most of the 4-hour range. So that would put me off. So as a rule of thumb, too large of a candle, can't get a 3-to-1 to the 4-hour low or high, or if the risk to reward tool has taken up the majority of the 4-hour range, just don't trade it. Even if it ends up being a winning trade, I'm happy to miss out on that one. Let's just see what happens. Move our range up. Sweep of the low, we're not buying. And we're outside of kill zone. So let's move our 15-minute range, wait for New York. $15-minute range adjustment. Now again, remember, if you're practiced, you can counter trend buy in discount, especially knowing that, okay, we've got some momentum. Most of the momentum recently on the 4-hour has been to the upside. So it is absolutely possible that we can get some moves to the upside. We're not going to predict the market. We can't tell exactly what's going to happen, right? But that's a possibility. Well, what have we had here? We've had a fractal range high sweep. Again, the candle's way too large. We know that. And we get an extended sweep. Is this one better priced than earlier? That entry was here. This one's a bit higher. Candle also looks a little bit smaller as well. So we've got 13, 14, 15, 16 pip stop loss on this. Give it 3 as a breathing space. And we can get a 3-to-1. But again, same situation. Again, go and look at my video, not the most recent one, interview with Ian, Funded Trader, but the one before that. I go over this quite a lot. It's just taking up too much of that 4-hour range. I'm not interested in taking it. Even if it's a winning trade, I'm not bothered. That probably would not have been a tag anyway, depending on what your brokerage is. So let's have a look here. It also didn't create a higher high, so it's not an extended sweep. That inside bar invalidates that. So there is no trade there. Outside of session, play it forward. We'll wait till the next day. And you can see how little information I'm really going by on this. It is very mechanical. Of course, there is going to be some discretion. We've never said that this is a zero discretion strategy. Every strategy has discretion, but it's just very minimum. So what have we got here? Our 15-minute external range is quite large. Doesn't mean anything. It's just what it is. So we can take the range high and look for sell, or we could potentially take this most recent fractal as internal liquidity as well. Like that. Again, same situation. Kill zone, liquidity sweep, 9, we'll give it 12 pips. This is much better. It's not taking up too much of the range. Happy to take it. If it's a winner or a loser, what's going to happen? Takes me in, takes me out. Now there's probably some news here actually. If I just put my events on the chart, let's have a look. I mean, I could be wrong, but just looking at that movement there. No news there. So absolute valid losing trade. We mark a -1. So we're up 2% now. Let's play it forwards. 50-minute external range is exactly how it is. And now we've broke free. Let's just click forwards a bit. We're outside of kill zone. It takes the high. There we go. So remove that. And again, like I said earlier, if we're seeing there's a lack of momentum to the downside and most of the momentum is pushing to the upside, we can also zoom out and see that we are printing higher highs and higher lows. We had this relief, this pullback at the start of the video where we saw there's an ideal turnaround point down here, and we're starting to see this momentum kicking into the upside now. So is there a way we can utilize this? We'll see. We've got to make sure that the setup actually fits our criteria. Again, we've had a bullish close, but it's only one candle. We need confirmation. Second candle, you can see this is maybe a news event, but we'll see what happens. It's NFT because it's a wick closure. So we'll just move that there. But what did it also do? Within that same confirmation candle, it actually took the low as well. So again, which is why I say quite often, smaller, tighter 4-hour ranges tend not to last very long. This one was formed and basically destroyed in the same candle, right? So we've now got NFT to the downside, which again makes more sense because momentum seems to be to the upside. So we can now look at buys immediately. However, look at where price action is. It's straight away on that candle closure. It's around the EQ of that range. We want to be well priced. We want price to be down here for buys, pro move, and we could potentially look for counter trend sells as well, as long as we don't have a huge risk to reward tool on there that takes up the whole range. Let's drop down to the 15-minute. So this is where we are now. We've had that pullback. Let's play it forward overnight. Wait for London open. Where's our 15-minute range now? It is here. So another large 15-minute range. Waiting for London to open. Okay, inside this range. So what are we? NFT to the downside. We're only looking for buys in discount as a pro trend move. We could, if we're advanced and we wanted to, we can look for sells in premium as well. But ideally is we want to follow that momentum, right? Now we're not looking to buy in premium, so we're not interested in that at all. And it takes the high. So that was a day where we did nothing. So what's this? We've got a wick close. So we actually have NFT straight away. No new fractal low. No follow through to the upside with a wick close. So maybe it's going to pull back a little bit. Let's see what happens. I think we're inside New York. We might need to wait for that to retrace. As we know, the 4-hour prints future price. So it looks like we're waiting for like 2 p.m. close, that would have been. Yeah, so we've now had that NFT. So we can look for shorts, but it looks unlikely to happen. I mean, it takes the high anyway, but what I mean by unlikely, because we would have had to print a new fractal high internally and then take that all inside New York, which is only a couple of hours for us. So that was unlikely to happen, and it's taken that 4-hour high. Now we can see it then continued. Again, we can see that momentum to the upside, which we did anticipate was more likely to happen, but we're just following our rules. That no follow through is now turned into follow through. In fact, no, it hasn't. We're now unconfirmed. So first time we've had unconfirmed on this. An initial wick is no follow through. If you get a wick followed by a body close, that's unconfirmed, because again, like here, we need that second candle to confirm our directional bias. What do we get? We get a bearish candle close. So we've now got no follow through. So maybe after this push, we're going to get a pullback, and that's the theory behind that. So we can look for sells. Let's adjust the 15-minute range up here. It was here, that's been breached to here. And I believe we're over Asia anyway, so we're going to have to play this forward and let it develop. What time is this? Yeah, we're in the middle of the night here, so let's play this forwards. Okay, 15-minute range. Where are we now? The lowest point before London. 15-minute high. So if we get a sweep of this fractal high, set an alert on that, I'll be looking to take that short. What do we get? We get a candle here. 17, so 20 pip stop loss on this. Can we get a 3-to-1 without it taking up too much of that range? Yes, we can. It's well priced. It's far enough away from the EQ, so I'm absolutely fine. Win or lose, I'll take this trade over and over again. We've got New York here, so we want to be mindful of that. So if we're anticipating that price can very well continue to the upside from a discounted price, we can look for counter bias moves to the upside. So we've got New York open. We have a most recent fractal here, which actually, if we draw on what the 15-minute external range would be, is actually a range sweep. First of all, the candle is quite large again. So if we were to use this candle for entry, it would take up the majority of the range, and we don't want to be taking unnecessary risk. It's a lot larger than the average size of the candles for that trading day so far, which is something that I like to look at. Do we get an extended? Yes, we do. It extends, and it's a much smaller candle, plus being lower down actually gives us a better price. So we'd remove that initial order if you had that, or we'd be looking to place our first buy stop on this. Round up to 10, give it 3, so that's 13 pips for the stop loss, 3-to-1, which you can see will be targeted much sooner than the trade before. Do we get a tag? No, we don't. And we get another extend. So we remove that initial order, we place a new order on this candle, still inside kill zone, round up to 8 and give it 3 pips, so 11 pip stop loss on this, 3-to-1. Again, it's even better priced, and the TP of 3% is much more achievable than if it was taking up most of the range. So it tags us in, still during New York, and that is a quick 3-to-1. We're still in the short, so it's up to you on what your management rules are. We recommend testing all types, taking break evens or a 2-to-1 on a counter trend. This is pro trend, so actually this would just be, for me personally, a -1. So let's mark these on. So we have a 3%. This would be a -1. We've got a -1 over here. And just a quick one around losses. Like, if you're trading one pair only, you are likely to encounter drawdown periods where you could easily on that one pair take 3 to 5 losses in a row before you then start to see some winners again. The outcome of every single trade, trading day, week, or month on any pair is completely random, right? So it's very probabilistic, but you can understand and appreciate that you are going to go through drawdown periods. If you are then trading more than one pair, knowing that on average a pair, a major FX pair, could have a drawdown of 3 to 5 losers in a row at any given time, it's rare to be over 3, but it can happen, then obviously you're increasing your risk exposure as well as your opportunity. And you just got to realize and have that perspective mentality that it's very normal to go through drawdown periods. You can't avoid losses in any trading strategy. So you just need to go with the flow, trust the process, trust the system, and make sure you've tested it thoroughly before you do actually trade it in a live scenario. What else do we have here? I think this is our first trade, which was a +3. Okay, yes it was. So we've got 3, 2, 1, and then we're up to 4% with one pair in about a week or so. We're just going to show a few more scenarios here. We're outside of New York. Is it going to go and take the high with that momentum? Yes, it does. So we've had interaction. We want to see what this confirmation is before we do anything. We've had a single body close, so it's unconfirmed. So it doesn't matter what time of day it is. We are waiting for the next candle to close for us to get that confirmation. So we get a second consecutive body with no prior wick, which is strong follow through. Move that range low up as well. Let's just move this out of the way. Move it over there. So we get strong follow through. showing again that momentum is to the upside. We can see what is more likely to happen is buys. We can look to sells when we get these periods where we're anticipating some relief, some pullback, especially in larger ranges like this. So we could potentially look for shorts, but we can look for buys as well. Let's go to the 15 minute. Now this was what, a 2 a.m. close, which we're not trading anyway. We'll mark out the 15 minute range when we get to London. That was a quick one. So we're extending this 4 hour range. Let's just go to the 4 hour, make sure we've had no more interaction with new fractal highs. We're still going off this bias. Strong follow through to the upside, expanded that 4 hour range. Now let's have a look. This is where our 15 minute external range was during London. No sweeps on either direction during kill zone that day, or that session, sorry. And it takes the high of this outside of session. Let's just move the 4 hour range higher as well. I know this might play it forward a bit, but again, we're just making sure that we're expanding this 4 hour range without it printing a new fractal and interacting with that. 15 minute. So New York wise, our 15 minute range was here. And again, no sweeps during New York. Play it forward, get a new interaction, back to the 4 hour. Right, we've got a new fractal here. We've not got a new low, but we have had an interaction. We've got a one single candle, so we've had unconfirmed. We're waiting for a second one. What do we get? We get a second consecutive body close, no prior wick. So it's strong follow through. Again, it's showing momentum to the upside. The theme of the video is noticing, especially in trending markets, when are we anticipating the relief to be over? We can see these interaction points, how the formation of the candles are, how they close. When do we shift our directional bias and how do we capitalize on this? And we're 4% up. Yes, we're leaving, potential opportunity on the table by not opening up to wider profits. But also by doing that, you're playing around with your risk to reward, your trade plan. What's tested on a 1 to 3 works really well for people's emotions and their lifestyles. And it holds a higher strike rate taking a 1 to 3 versus trying to take a 1 to 30. You're going to take probably 10 losses in a row until you get there, at least. So strong follow through, we can look for buyers anywhere. This is still our low. And we can also counter trend, knowing that at some point, price is likely going to want to pull back. But we obviously don't know when. So we just wait for the 15-minute setups to arise. Where are we now? Just getting closer to London. This is London session here. So here, strong follow through, we can buy anywhere. We've had an internal fractal sweep inside session, and we could have placed an entry on this. I know I've played one candle forward too fast there, but that would have not played out anyway in terms of wouldn't have tagged in. You wouldn't have been tagged into that order, so you would have removed that. And what does it do? It creates a lower low. So this is an extended sweep. Now, you're noticing that I'm targeting beyond the highs. And that's because, I'm not going to click on the 4 hour because it will show what will happen, but there's no fractal on the 4 hour here just yet. So when there's no 4 hour fractal on a strong follow through, we can continue and expect to get either a 1 to 2 or a 1 to 3. That's open to your personal preference with strong follow through. Stop loss size, I'm going to round up to 16 on this because this is GU. And if we go for a 3 to 1 on this, I'd be happy with that. So we get tagged in and we get tagged out, probably at that point with spread. So we got a -1 there. No emotion with losses, just as much as no emotion from your wins. That's just going to form bad habits doing that, right? So we're still within this 15-minute range, then we break that. New 15-minute range high, and we'll play forward till we get to New York. Just expanding this 15-minute range. New York has started, and we get a big news event here, get inflation rate. So we're just waiting now. We've got a new interaction with a 4 hour fractal, or is it even a fractal? It's not even a fractal there. So let's move this out of the way. We've still got strong follow through. We'll play it to the next day, expanding that 4 hour range. Play this forwards overnight. We do have some news again the following day, just to be aware of. You're more likely to catch this in a live scenario because, again, with back testing, you are steaming away. 15-minute range would be here. Just have a look at the 4 hour again. Is any fractals formed? Yes, there is. So what have we had? Strong follow through again. 2 consecutive body closes. I know that's going to skip ahead there, so we'll have a look to see if there was any areas that we would have looked to trade. Or inside Asia at the minute. Do we get anything for London? With red folder news, I wouldn't be entering trades within like an hour of that news release. If I was already in a trade and it was a high impact news event that is considered restricted by prop firms, then I would close out manually. Otherwise, I would just leave and hold through. But I'm not going to be entering new trades during that time. I'm not going to do it. Okay, so we got London here. News has passed. Now we can look at counter trend play. We can look at sells, but this candle is very large. So we'll see if we get a smaller candle for an extension. We don't get an extension on that because it doesn't create a high high. And we get a sweep again. Again, the candle's quite large and it's just continuing. Again, another large candle, and that's where we get that confirmation of strong follow through. In fact, this first push anyway, there was no opportunities, but actually that would have been one bullish candle. That would have been unconfirmed at that point. We would have been waiting for this second push actually before doing anything. That's extended the 15-minute range and the 4 hour high. And we'll skip back to the 4 hour to see what we've got. So I've got a new range low, new fractal low formed. We've still got strong follow through here. Play it through overnight. So we know what our bias is. We've still got strong follow through. We can see that momentum to the upside. This sweep here looks valid, but that would have happened actually unconfirmed. So we would have not taken that entry there. And outside of session New York. So let's play it forward through Asia. Again, back to the 4 hour. New high, no fractals. What have we got here? A low. Let me zoom in. Again, we're speeding this up because we're going through, where are we now? The 14th. We've done a good 2 weeks or so, maybe longer. We're not in kill zone, so we're not interested right now. I'll amend that range when we get there. So this is our range. We've got strong follow through to the upside. We can look for buys, but we can also counter trend and look for sells. We're going to get some kind of liquidity either side. We've got a low here, so we can look at setting an alert here. If it sweeps that, we can take a buy. Or if it takes the range high like that, but it's actually taken the 4 hour high. Do we have a fractal here? No, we don't have a fractal just yet. So we can keep that as it is, just extending that. Candle's very large. We're outside of kill zone now anyway. So we'll just adjust our 15-minute range. Wait for New York. Okay, do we get a fractal sweep here? Yes, we do. What time is this? Nearly 2 p.m. So we've got no fractal here, so we can look for buys. Candle is quite large. In comparison, really, for me, I'm happy to sit this one out. The candle here is quite large. I know we've got some larger ones here, but if you look at that previous 12 to 24 hours and just look at this, it's probably like 80 to 100% bigger than the rest of them. And it's just something through experience and something that I keep saying. Again, when you keep your data going, you will notice these things more. What have we got here? We've got a lower low. So it's a slightly smaller candle. There's not much in it, but it is slightly smaller. I'm happy to take this one. It's got 15, 16, 17, 18 pips. And there's no fractal high on here. So you can look to either take a 1 to 3 or a 1 to 2 on this. We'll see what happens. Tags in. Now also what we need to look at here, and this is why not to marry any single trade. You take a trade on and you're not emotional. You put a trade on, you don't care if it wins. It sounds strange, but you don't care if it loses. You need to get used to that. That's not the usual human mentality, but it's something to get used to. Why? Because you get an internal fractal high here that gets swept 15, so 18 pip stop loss. So I'm happy to hedge this short, knowing that it still fits the criteria. We could potentially get lower prices in the anticipation we're going to get a pullback after such an impulsive move to the upside. I am long, I'm not moving any break evens. I'm not closing that position off early. We'll see what happens. That tags us out -1 on the buy, and it tags us in at the same time to the short. There's still no guarantee that the short's going to play out, of course. We'll see what happens. We're outside of kill zone anyway, and we'll just see what happens. We've got Asia session. Okay, moving our range. We're still in the short. We've not hit TP on this, and it could be a losing trade. 4 hour, let's just have a look what happens here. Okay, so we've formed a new fractal high and a new fractal low as well overnight. So we're just moving this up. That was the range, which we've breached. So we need to play catch up with the 4 hour. Again, in a live scenario, you would have done this much sooner than this. Bearish, bullish would have been NFT, and then bearish again is follow through. So we are now in a bearish market, and we're already short. So yes, the target before that 4 hour low, you can see is not valid, but the trade was there while we had a wider range. Our 4 hour low was way down here at the time that we were tagged into this trade. So that is still valid. Now we've got a much tighter range, and there's not really a lot to play with. We're not going to be selling in discount. We are not going to be selling at the EQ. We need to be well priced. So any of these sweeps, they're not valid to take. Is it going to push higher and give us a possible entry? We can even consider things like this. Sorry, if we go to here, this was our 15-minute range before New York. We get a sweep of the low. But if you're looking to play this as a counter trend follow through move, yes, we know the theme of the video is momentum to the upside, but put in a 3 pip stop loss on this, you're going to be taking almost all of this tight 4 hour range, which again, I'm saying time and time again, you don't really want to be doing that. Smaller ranges tend not to last very long. It wouldn't have tagged you in anyway. It would have breached the lows, and we get a 3-to-1 on this trade as well. So plus 3%. And that's when we'd move our 4 hour lows down. High stays where it is. 15-minute range here. We're unlikely to get any positions in New York because, like I say, it's a very tight range. Yes, it sweeps the lows there. But what's our bias? Our bias is follow through. So we're looking for trades to the downside. We've got a new fractal high form, so we drag that down. We've still got follow through bearish, but our range is so small, we need to be in and out 3-to-1 before the range low or high. So even taking this sweep, you wouldn't be able to get that 3% before the low. And even if you did, if the range was slightly larger, you'd be taking up most of the range with your RR tool, which we don't want to do. Let's play this forwards. We'll do a tally of the percentage that we've gained or lost during this period. We'll just see what happens with this 4 hour range. Do we breach the high or do we breach the low? So we're outside of session. We're not looking for any trades in here. That breaches the low. So our 15-minute range is here. Play it forward. There's a nice sweep here. Unfortunately, this candle was really large. I remember this because this was literally a couple of days ago. It's now the 21st of July and I'm looking at the 18th. So this was this week. If this candle was much smaller like this, then I would have definitely looked to have taken this. Look, only half the range, but just look how large it is. It's just a shame. Wouldn't have taken that, but it was well priced in premium, pro move. It's taken the high. And sometimes you get that, right? You just got to wait for the trades to come to you that fit your plan. What have we had here? We've had a wick straight away. So that 4 hour liquidity pool interaction is no follow through. What does that mean then? We had bearish momentum. This is signaling that there's lack of momentum to the upside. So it looks like things have switched and things might come back to the downside and follow that that momentum to the downside. Let's see what happens. That was London, so we'll wait for New York. In fact, this is the NFT that we just spotted. We need to let that play out. So we're not looking at doing anything until this point. That's NFT confirmed. We've taken the low there, so our 15-minute range low is there. And our high is here. We get a sweep here, but look at the range. We can't get a 3-to-1 to the low, so we're leaving it. And that takes the low out anyway. So again, that bias of that no follow through to the upside played out because price then pushed again to the downside. So let's just tally up on here. I'll finish at where we are at. There are actually no positions the last couple of days, I know, because we're at literally like Wednesday this week and it's now Friday of recording this video. So we got 3, 2, 3, 4, 5, 4, 3%, 2%, and 5% for GU. Following these rules, looking at momentum, we're following 4-hour directional bias, liquidity interactions using the 4-hour fractals, and then our bias based on how those candles form and close at these interaction points. And then you see the 15-minute entry models time and time again. If you haven't seen my other videos, go and see those. I've got more backtesting videos and I've got funded trader interviews to watch. If you enjoyed this video, please let me know. And if you have any questions, just throw it in the comments and I'll get back to you. Make sure you subscribe for future videos and I will see you on the next one.